welcome back to CoinDesk Live. We are coming to you from the Avalanche Summit in London. This is a special edition of Markets Daily, and we're joined now by VanEck Portfolio Manager Pranav Kanade. Hello, Pranav.
Hey guys, how are you?
Great.
We're doing fantastic.
Yeah.
Okay, well, I want to start here. You lead VanEck's Digital Asset Alpha Fund, right?
Mm-hmm. Correct.
I said this to Sam before we came back from break.
Yeah.
Like, Pranav's going to give us the alpha. He leads the alpha fund. So let's start here. I mean, what are you looking at? What's interesting to you? I know you don't like to follow the trends.
Yeah, so we are slightly in a unique position where we can do both tokens as well as public equities in our fund. And one of the opportunities we've generally seen that's less explored by most market participants, whether it's crypto people or TradFi equity people, are just looking at public companies, internet companies, e-commerce players, and asking how much of their cost structure is interchange fees and banking fees, and to the extent they can leverage stablecoins post legislation, how much of a margin uplift can they have in their businesses, and to the extent their businesses can get a bigger multiple as a result of that, what is sort of the upside to their equities. So we've been doing that work for the last several months, and we've slightly tilted our portfolio towards that, as generally we've observed that most altcoins in the market are likely going to struggle. So we think there's better opportunity in this other pocket of the market.
Can you tell us some of the equities that you're looking at?
So unfortunately, I cannot come out on a call like this or event like this and talk about some of our holdings, but I think the way we approached it, if I were to sort of share the approach, is we kind of mapped out all the players and then generally kind of started with a belief that much of the adoption from these public companies will come from founder-led businesses where the founder is the CEO and is the sole decision maker and is really focused on optimizing the underlying business. And it's especially valuable if these businesses are either in the US and have a lot of cross-border payments, or international players where they're realizing that their local audience wants access to cheap dollars and they're finding kind of unique ways to give it to them. So we kind of mapped it all out and then ultimately asked who are the biggest winners and who are likely going to win over the long term, and we're just kind of focusing on the biggest winners today.
Are you looking at sort of small to mid-size, or you're looking at large companies? I mean,
No.
I can think of a Shopify and say, hey, when you unlock stablecoins, this is a big moment. So it's really, it's everyone.
Yeah, we're looking at some of the larger players because, I think that's where like the less explored opportunity is. If I think about what's happening in the public equity markets, much of that market has gone to passive, ETFs and index type products. And then you have a handful of sort of large hedge funds. Like I used to work at Millennium, that's a large hedge fund. Similar to Millennium, there are other players. And those folks only focus on what's going to happen in the next 3 to 6 months. And what we're looking at here from a stablecoin perspective is something that's going to take years to play out, and it's going to dramatically change a lot of these businesses. So just extending that time horizon allows us to really focus on the big opportunities there.
You said that altcoins are probably not going to do as well as they did before. If we bring it back to a more crypto-focused angle, what are you looking at there? Where do you see the upside when we look at what's going on specifically in crypto?
Yeah, so one of the things we say in our team is stablecoins are clearly the product with some PMF here that's going to continue to work. The next thing likely that's going to come on the backs of that is tokenizing TradFi assets, bringing them on chain. Mm-hmm. The why is very simple, which is people outside the United States want dollars. We're exporting the dollars with stablecoins. The next thing is we're going to export the US capital markets as well to the same people. So if you're someone in Argentina and you have a wallet and now you have a bunch of, let's just say, stables, you naturally would like to probably want some T-bills with it, or maybe some US equities, those types of things. So when we look at let's just say the crypto universe, the token universe, we generally ask who are going to be the winners of that theme as assets get tokenized, brought on chain, and ultimately some fintech will enable that for their local customer. But really what's going to be on the back end of that is the question we ask, and some of our token positions are tethered to that. The next thing we kind of think about is we think part of the reason the altcoin market is structurally kind of in a bad place is there's not that many pipes into the space. There's not an easy way for pools of capital to access this. I believe that one day you'll have ETFs that are multi-token that will be somewhat rules-based, right? The way we have the S&P 500, which is 500 great companies that are GAAP profitable for 4 quarters, those types of rules. I think you'll have similar rules for what makes a good token that will ultimately make its way to a multi-token ETF where all the TradFi money can just buy that one product and get access. We think asking what are those types of tokens that could make their way into that product one day is a good question to ask, and then finding winners within that, because those things will likely get a lot of flows one day in the distant future.
So in the future, we're buying an index fund that has bonk in it or has dog with hat or whatever because it's fit a rule set that makes sense.
Maybe not those tokens, right? Because those things don't get any fees. Yeah, as examples. Yes. Yeah.
Okay. I want to go back to stables for a second. We've been hearing a lot about them over the last 2 days.
Yep.
Because the seat you sit in is looking at public markets as well as crypto, what do you think that the average viewer at home isn't understanding about the opportunity in stables, not 3 to 6 months, but to your point, 2 years, 5 years, 10 years down the line?
Yeah, so the biggest one, especially in the United States, really is explaining to people what are the benefits of stablecoins. Because we have a great financial system in the US, we have great fintech apps, everyone uses Venmo or Cash App or whatever, and they're like, why do I need this stablecoin thing? But really, if you think of just generally e-commerce or even just, physical commerce in the US, the credit card and banking ecosystem takes around 3% of every transaction. Much of that are fees taken by the banks. And now a lot of that is for chargebacks as well as the points programs and rewards programs. But if you just think of those two components, which is chargeback and fraud risk as well as points programs, that's a very opaque landscape, right? The banks make all their margin in that opacity. So I think a lot of that could be replicated on top of stablecoins, and you can give the user the great credit card experience, but running the whole thing on chain one day, and there's meaningful cost savings to be had from that. So it's just articulating that to people is sometimes like sort of the struggle in the Western world. It makes a ton of sense for people outside the US, especially those that are just unbanked, and so this is like a new thing for them. But to the extent folks start to understand that cost savings opportunity, then they naturally ask, well, who's the loser from all this? And the answer is, well, it's the banks, right? Like if you look at any bank's like kind of income statement, their revenue and profit center are the credit cards. So to the extent you can disrupt that via stables, I think it's a big opportunity.
I want to come back to the altcoin point, and then we got to wrap up. In this future you envision where we have ETFs that have like a basket of different altcoins, what do you think that means for the retail investor or the smaller market participant? DeFi is really, right now, the ethos of DeFi is that everyone has access. What do you think that means for smaller investors?
I don't necessarily think it means anything negative. I think, folks are going to be able to access these protocols and use them. I think it's all a function of regulatory, so that's more of a regulator question. I think what it could mean for projects and founders is if they focus on the right KPIs and they build their business the right way, they might not be getting love in the market today. I feel like a lot of deep-in founders feel that way, which is they feel like, hey, I'm building some great things, generating some fees and cash flows, and my token trades at a fraction of the market cap as a meme coin. So like, why am I doing this? Like, I've noticed that sentiment from a lot of founders. And what I tell them is, you might not be getting appreciation today because there's not a rational pool of capital or institutional capital that can make its way to very easily, but that will change in the future, so keep kind of doing what you're doing. And in this rules-based system for capital allocation, you might be a big winner one day.
Pranav, thanks for joining us. We hope you enjoy the rest of the event.
Cool, thank you.
That was VanEck Portfolio Manager Pranav Kanade.